Hi there everyone and welcome into this week's market update. Don't forget that any advice contained within this presentation is general only, so it isn't tailored to your particular circumstances. You need to decide for yourself what is appropriate to you. Okay, so our market today managed to push a bit higher, okay, but still holding roughly around a bit of resistance here. We've had a bit of intraday resistance for the last few sessions, or I should say the last week or so, around this 75.40, 75.43 level, okay. You can see we played with it back here, we toyed with it a few times through here, and now we're back touching that again. If we clear through this level, obviously the all-time high at 76.35 is next target. Overall though, look, trend's still very much intact. Look at that trend, okay, that is a great looking trend line, guys, okay, it doesn't get much better than that, okay, so this market is moving relatively well technically. We're seeing roughly 6 to 5% movements up off the trend before we see a sideways or pullback phase. This time around we've pulled back to the trend line rather quickly. I'll probably say we'll play around between these boundaries for maybe another month or another week or two, depending on how much strength we see continued into the US. Dare say the US at some point is going to drag us higher, guys, okay? Don't know if we can do it on our own right now. We are going into that dividend period though, which means we usually hold back a bit. This is the period of time where we sort of do hang back compared to world markets, as a lot of stocks go ex-dividend. Once that all clears out though, we tend to then join back in on the action. So I do strongly believe at some point soon we're going to break higher. Timing is unclear as usual. You still got to wait for the technical signals to tell us that the breakout's happening. There's still plenty of room between resistance and the uptrend line, so there's still plenty of room where this could be squeezed and squeezed and squeezed and squeezed sideways before it's forced higher or lower. The other thing I'd like to mention is we have not seen a correction in this market this year. Correction meaning 10% or more pullback. Usually at least once a year you see a correction, guys. We have not seen that on our market yet. We may not see it this year. Okay, it was a very unique year this year, but it's always in the back of our mind. Okay, always worried about that next big pullback in our trading. So anytime the market looks a bit overheated or the trend looks like it's breaking, we look to then reduce exposure very, very quickly. Okay, the more this market uptrends, the more I will be very reactive to a potential break to the downside. Okay, I still think there's more in this. I do think we could easily get to 8,000 before year end. I think we could easily get to 8,000 without a major pullback again, right? As I said before, every time we hit trend, we manage to get 5 to even 7% movement higher, while 7% brings us smack bang on that 8,000 level. Okay, so it's within reach, guys. It's not unreasonable to say that this market, by the time it hits the end of the year, it could get up to around that 8,000. I'm not saying exactly 8,000, guys. I'm saying thereabouts, right? 79 would even sort of be close enough for me. Another 5% movement up from this trend line is probably where I'm thinking things will move next. And obviously we're always reanalyzing what we think is going to happen after that. S&P 500 roaring into blue skies. Okay, so we're pushing higher, the trend strongly up. We had broken into all-time highs here, took a bit of a breather, and we're continuing on, or they're continuing on. You know, for them, their movements off trend, you know, lately 4-5% as well. Okay, so we could easily see a little bit more in this. At the moment, we're sitting at about 3.5-4%. I think for me, a reasonable target would be 4,600 at this stage, the way it's been moving. All right. I think we'll likely see a slow grind back up towards those levels, being that's the next whole level. Okay, every time we break into all-time highs, it seems that markets love to find that next whole level, right? You can see it came up and played with 44. Okay, took a while, broke through, found a bit of support at 44, went through 45 now, and then probably pause at 46, thereabouts. Okay, I think that's pretty logical at this stage. So a few reasons for the strength around the US. One of the reasons is obviously progress in Biden's stimulus and budget plan. He it sounds like the infrastructure bill is going to get through. The question is whether they try and go for the full 3.5 trillion budget that Biden's working on. We'll find out more over the next 3 to 4 weeks, guys. I think they will get it through, right? I really do. And that's quite bullish for markets. It's going to continue to help push the US economy forward and help push the equity markets higher and higher. So, look, we'll hear a lot from this over September, and that's what you want to be keeping an eye on. As long as things continue to progress in a positive manner, I do believe that's going to add a lot of upward pressure to the markets. The other thing is the bond tapering. We saw the Fed members, central bankers, all catch up. What's usually in Jackson Hole last week. Obviously, they met virtually because of COVID. At the end of that meeting, Jerome Powell came out with a pretty precise and clear message. Okay, the message was we'll likely see some bond tapering this year. Okay, they will likely announce something at the end of September to start beginning some form of bond tapering in December. Now, if they do this in a slow and steady manner, similar to what we've seen other central banks around the world do, I think the market's going to be fine with it. The main message, okay, that got through that's positive for markets is he said, and he said it very clearly, if they top taper bonds completely, it does not mean an interest rate rise is going to happen straight after. Okay, what that says to me personally is we probably won't see interest rates touched by the Fed Reserve until around 2024, right? Or late 2023 perhaps. Okay, something drastic in the inflation side of things, or something drastic in some economic data, hyperinflation, something would have to happen for them to move that forward. But at this stage, okay, and the one big thing that I think the market's worried about the most is interest rates, and for good reason. Okay, as long as interest rates stay where they are and they taper bonds slowly, and they'll be monitoring the pace of bond tapering every meeting, okay, something like that, the market's going to like it, okay, because it means that we're going to have some form of accommodative stance. It means that the Fed's still fairly dovish. They're not looking to really really start hiking rates anytime soon, and that's what the market wants. The market wants stimulus. It wants the stimulus to only be removed at the right time and done very, very slowly. If they take their foot off the pedal too quickly, guys, okay, that's where the market could crash. So there's always a correction on the horizon. You never know the reason for a correction. A lot of people were expecting a correction out of the Fed tapering. I don't think that's going to be the case, guys. For us to get a correction around around central banks, or a message from the central banks, it's going to be because of hyperinflation or something else happening that's going to get people speculating on what the central bank's going to do next, right? So that's what you got to look at, that sentiment, right? You got to look at that little nuance there, that not everyone believes the Fed, okay? The market's liking it at the moment. He said the right thing for the moment, but analysts can be quite fickle at times, and if they see a few really strong readings of inflation, the market could turn on its head again in the short term. Overall, though, what we're seeing here is, even though we're getting those short-term bits of volatility on the back of people speculating on these things, at the end of the day, the Fed continues to come out and reinsure markets. Jerome Powell's doing a very good job of that in the longer, medium term of things. He comes out, he says the right things at the right times, and the market continues on its uptrend. All right. So yes, what I'm sort of saying there is, yes, we're going to get volatility in the short term, right? There's always going to be those peaks and troughs, and that's good. That's healthy, right? So always expect that. The market's not going to go straight up, guys. We're going to get pullbacks, right? But overall, what we're looking for is that trend to hold and that grind higher. Right, we want to see the market continue to go up that staircase, and that's a healthy trend. We can trade that. Okay, it's very, very tradable at the moment. It's been a fantastic year for trading. So blue skies ahead, right? That's what it looks like at this stage. As I said before, I think we could easily see a few more days up in the US markets that could see the S&P 500 near 4,600, but then they may be due another small pullback. Perhaps we might see a small pullback into the Fed meeting at the end of the month. Perhaps we might see a small pullback around, the Biden administration pushing forth their $3.5 trillion. Who knows, right? Who knows what that news is going to be? But at some point, the markets are going to get a bit toppy again, and we'll see a small piece of news that will cause people to take some profits. Okay, and at this stage, I think there's another good bit of a push up to come. Okay. All right. So last but not least, locally, I guess it's all about COVID. Okay. A lot of people are worried about these lockdowns. Okay. So you got the two of the larger of the states in Australia locked down pretty heavily right now. But I guess the conversation we're hearing is moving away slightly from daily cases to daily vaccination rates. And as long as they can continue to prove strong daily vaccination rates, I think the market's going to eventually kick up. I do think our market's going to join in and join the US market into blue skies, as long as this vaccine rollout continues to see progress. Okay, so that's where it's at right now locally. Obviously, there's other things at play. With iron ore crashing back off the way it has, pressures from China around commodities and things. We obviously got to keep an eye on the supply chain issues if they continue to pop up. But the underlying tone is still, for me, very bullish. It's always going to come back to this one thing, guys. Accommodative central banks. As long as the central banks keep the debt market healthy, as long as we've got a path forward on vaccines, as long as there's more physical stimulus down the pike, the market's going to continue to edge higher. Okay, they're the main criteria, and then next year it becomes different. Next year it's all about economic growth. It becomes a different sort of talking point. But for now, the next 6 months, we're still in that point of time where it's all about stimulus. It's all about central banks. Okay, that's what we've got to keep a sharp eye on here. Okay, all right. So that's probably it for me this week. Thanks for listening in. Take care and bye for now.